Rightio. Welcome to the 20-year anniversary of the RIU Explorers Conference. Whoa! Thanks to Mark McGowan for releasing restrictions last Sunday. But no, it's a good thing because all of our exhibition build was scheduled in for 6 a.m. Sunday morning. So if it was a day later, you wouldn't be sitting here right now. So on this particular moment, once only, well done, Mark. On behalf of myself and my conference partner, Mr. Simon Hadfield, who's in the audience, it's a pleasure to be on stage talking to you for that very reason. What a year it's been, and what a few weeks it's been. Obviously COVID, well, cutting it fine, but we're all here, no masks, so that's a good thing. Firstly, I would like to acknowledge the Noongar people, the Whadjuk tribe, on whose traditional land this hotel is built. And we pay our respects to the leaders past, present and emerging. Thank you to them, very important. Last year, I just returned from China at this time, with my wife having been seeing Mama for Chinese New Year. COVID was just beginning. And on the Thursday of the Explorers Conference last year, the market hit its high. That Thursday was the high at that time. Well, all hell broke loose after that. The market died, COVID sprung on us, and all our hopes sank as we all sat wondering what the hell to do next. We had a terrible few months, but we all endured. Was this ever going to end? This next slide you see up on the screen is me at home, sitting looking out my back window thinking, what the hell am I going to do now? I didn't have any clue. Watching endless Zoom presentations. Well, we all got sick of Zoom pretty quick, didn't we? Then the rains came and the winter came and more bloody Zoom presentations and the market crashing all around us. I think my portfolio went down 70%. But that all finished. Then the sun came out. We got back on the golf course. I don't know why, but we did. Oops. Then the market made a remarkable recovery. The gold price went through the roof and suddenly COVID didn't seem that bad for all of us here in WA. With that, at this point, I want to thank our Victorian folk who are once again in lockdown, and we're thinking them ahead. We thank them and we're thinking of you over here. We also have live streaming as we speak. So all those people in Victoria can watch us in their lockdown. We have over 1,000 registrations for the 3 days so far. I'm sure more will come in. So the live streaming does work. It's not Zoom, it's live streaming. There's a difference. And so we want to say hello to everybody watching wherever you are in Queensland or in Singapore or in China or wherever you are in Australia. Just to mention my point about the market cap upswing, the combined market cap of all the companies speaking here this week, yesterday, was $26.5 billion. This time last year, it was $15.5 billion. So that's a pretty reasonable increase. Most of that was Canaccord raisings, by the way, but sorry, Michael. This slide up on the screen, which you can't read because it's way too big and all the writing's too small, but it just highlights the facts of all the market cap increases. And of course, leading the first two cabs off the rank, no surprise, to Grey and Chalice. And I'd like to thank Steve from MacCorp for giving us that slide. He's full of interesting information, is MacCorp. Okay, sponsor time. Canaccord, 20 years. Big thank you to Michael and his team. I know Michael's in the audience here somewhere. 20 years, they've been supporting us for 20 years, so you can't get any better than that, 100% strike rate. It's been a great partnership. We enjoy our partnership with Patterson's and then Canaccord, and we hope it goes on for a long time yet. We have a few other sponsors that have been with us for a long time. I'd like to thank ANZ, who will be speaking shortly. They've been with us for some time. Gallagher Insurance, they're a great supporter of ours. HWL Ebsworth, the lawyers, they've been with us for a few years as well, and been with us forever, BDO. So we want to thank all those. On the screen behind me now come up a whole pile of slides as I talk of the other sponsors. Jerry will go through some of those in a bit more detail, but we thank all them as well. On more of a serious point, I would like to just bring to your attention today a point for discussion, something that you can talk about over lunch or out at your booth, and that is the low number of young people who are making presentations here this week. There are some, but it's essentially the same old faces over and over again. Now, I fielded a few calls on this issue, in particular one saying there's only one female executive presenting. I'm not going to talk to that point, but I'm going to talk to the point of younger talent. And we have so much young talent in this industry and so much coming through, and so many of the companies are doing great work with their talent and their boards and their diversity. And it's great to see, and we need to keep that young talent engaged. We need to keep that young talent diversified, and we need to bring them through so they are ready to step into the feet of board level positions sooner rather than later. I believe some of the speakers will be addressing these issues later in the conference. I think BDO is going to be addressing this issue, as well with the fund at the end, and they'll mention ESG. ESG is obviously the big talking point at the moment, and all those points are covered, rightly or wrongly, but that's the way the world is moving. Now, finally, before I get off stage, we are gathered here today in a celebration of mining. It is incumbent upon us to reflect on those that have made our industry what it is today. And I'd like to draw to people's attention to the recent passing of Dr. Roy Woodall. I believe he died 2 days ago. For those that don't know, Roy made himself the force behind Western Mining, a company he served for his entire working life. He's one of the doyens of our industry, up there with R.V. Parber. He was a guiding figure behind some of Australia's richest discoveries, Kambalda Nickel District, Olympic Dam, copper, and there's others. So what better way to share his contribution here today amongst a crowd that is equally passionate about geology. Thank you, Dr. Woodall. It is now my pleasure to introduce the one and only, the Mad Irishman, Mr. Jerry Gannon, who will take over, talk through all our sponsors and introduce and get us underway. Thank you for attending. I know it's been tough out the front desk with all the COVID. Health Department made us do it. We have to do it. So thank you, welcome, enjoy the show.
Thank you very much, Stuart McDonald, and what a pleasure it is to be seated in front of a live audience, the first one since the COVID lockdown, and it means that I have staved off bankruptcy for another couple of days. To begin with, ladies and gentlemen, we are going to announce the Craig Oliver Award. Now, full details of the award, plus some words about Craig, are in your program. The award is presented annually to an all-round small to mid-cap Australian mining company, which has excelled in areas including exploration, mining, corporate, market results, environmental and community over the past 12 months. And this year, the sponsors of the award are Canaccord Genuity, Western Areas, and David Flanagan. We welcome on stage Chanel Oliver, wife of the late Craig Oliver, who will present the award today, together with Craig's daughters, Hannah and Sasha. Please make them welcome as they come on stage. Sasha. It's just Sasha, I think, today. And Chanel is going to say a few words to begin with. Chanel.
Good morning, everyone, and welcome to the 10th anniversary of the Craig Oliver Award. Last year, I talked about the new decade, 2020, and the new focus for the mining industry. This involved accountability and sustainability, and most importantly, looking after people, planet, and profits. However, that changed. With the onset of the global pandemic, that focus was altered. Looking after people became the most important challenge for everyone, putting the planet and profits aside. Australia's mining industry became an example of incredible resilience and flexibility, Everyone in mining played their part, including relocating across the country and quarantining to keep the mines going. It is people like yourselves that are the most important to the industry. On that note, Craig was one of the most resilient and caring people I've ever met. And I know that all those who knew him would agree that he never gave up on anything or anyone. He not only cared strongly about his family and friends, but he was passionate about making sure that all the people he worked with were okay. He went out of his way to engage his staff, talking to them and helping them if needed. That included the cooks, the cleaners at the mine site, everyone. He was a real people person. I would also like to add that in the past 10 years, Craig's 3 beautiful daughters, the baby is here, have grown into 3 amazing and successful women. They too have shown incredible resilience and determination in overcoming grief, loss, and the challenges of life. This award is presented to an Australian mining company who, like Craig, is an all-rounder. They have excelled in exploration, mining, corporate, market results, environmental and community over the past 12 months. I now hand over to Stewie McDonald to announce the winner.
Jerry, do you want to go through your brief first?
As Stuart makes his way to the stage, let me just tell you how this works. The award has been voted on by 5 judges who cast their votes on a 3-2-1 basis. Therefore, there are 30 votes to cast. Stuart.
Thank you, one and all. Up on the screen now, we've got the past winners. So we'll just let that slide load as we talk about the past winners there. 2011, obviously the first one. Very emotional time that was. Here we are, 2021. This year's nominees for the Craig Oliver Award, you all know them. Bellevue, Chalice, this is in alphabetical order. De Grey, Phoenix, and Perseus. 5 very good companies. Let me just tell you how this works. There are 5 people who vote on the award. And each person votes 3-2-1. So there's a total of 30 votes are cast in the preparation for this award. So it's a pretty comprehensive award. And I'd now like to go through the votes. On 2 votes, Phoenix. 5 votes, Perseus. And then there were 3. 7 votes, De Grey. For those of you in the room who do maths, there's 14 votes counted, 16 votes to go, 2 companies left. For the first time in Craig Oliver Award history, we have a tie. Please welcome to the stage, Steve Parsons from Bellevue, Alex Dorsch from Chalice. Thank you very much.
Great. Move this up a bit. Thanks so much to the Oliver family for the award. It's great to be up here receiving this on behalf of Bellevue, and congratulations to all the other nominees, and it's great to see Chalice with Alex up on stage as well. Thanks very much to the RIU conference. This is a great conference. I think I've been to every single one since it started 20 years ago, so fantastic to have it here in Fremantle. And it's great to have the support of the West Australian government with striving for mining and exploration here in Western Australia to make it one of the places to be for discovering gold and for getting mining projects up and running. And, very proud at Bellevue of what we've done over the last 12 months. It's a great project, but it's got great people as well. And it's the people that is the really important thing, as was just mentioned then. People strive for the vision of the company on where to grow. And we certainly have, the vision of Bellevue for the next 12 to 18 months to be the next, one of the next gold producers here in Western Australia, to be one of the most profitable gold mines in Australia, and to have the vision to be one of the greenest gold companies in Australia as well. And so that's all down to the staff and the people that really do believe in what we're doing at Bellevue. So thank you very much.
Thanks, Steve, and congratulations to the entire Bellevue team, and thanks very much to the Oliver family for this prestigious award. And thanks obviously to the sponsors and the organisers of this great event. It's great to be here again, and particularly good, I think, to see the exploration industry in the good shape it's in today. You saw that chart, I think, Stuart put up earlier about the market cap growth, and that's, I think, reflected in the achievements that are being made across the exploration space, particularly in Western Australia at the moment. So look, we're very grateful, and it gives me great pleasure to accept the award on behalf of my team. I do need to acknowledge my fantastic team, particularly the geologists, who've made a great discovery just outside of Perth here, and we have high levels of excitement about it, and we're looking to progress that discovery ahead as quickly as possible. So thank you very much.
Congratulations to our winners. Photographs are now being taken. And thank you to Stuart McDonald for his Eurovision Song Contest style countback. Okay, we continue, ladies and gentlemen. Firstly, let me just tell you about this book. It's called Rocks in Our Heads, Stories of Exploring for Mineral Deposits in Exotic Lands. It's collected and edited by Andrew Drummond, and we have a limited number of those books available at the registration desk. And also Australia's Nickel Adventure is also available at the registration desk. And it features a photograph of that gentleman who passed on very recently. We continue now with the market update and the outlook for 2021, sponsored by Canaccord Genuity. Paul Howard is a mining analyst with Canaccord Genuity, which he joined in August of 2020. He has over 15 years experience in the resources and finance sectors. He's a geologist by profession. He transitioned into an analyst role in 2016, researching mid to small cap companies. At Canaccord, Paul specifically covers the junior exploration developer end of the market. Prior to this, Paul spent 11 years as a geologist in WA exploration and mine environments, working in a variety of commodities, including gold, nickel, base metals, and iron ore. He's held senior roles with Northern Star Resources, St. Barbara, and Atlas Iron. Please welcome Paul Howard.
Thank you very much. Pleasure to share the stage with an Irishman. Look, delighted to be here to give the market update for Canaccord this year. Like the miners, we do have disclaimers as well. I hope all the information I'm going to provide you is accurate, but please, don't take this as personal financial advice. Look, Canaccord is proud to be the gold sponsors of the 2021 RIU Explorers Conference. Canaccord, it's a global investment bank offering the full suite of products to the small to mid-cap miners. We've got international reach, cross-border capabilities are our key advantage. We've got teams in the US, we've got guys in Hong Kong, we've got a whole raft of people in Canada. So it's really a global company. Domestically, we have a large network of investment bankers, institutional sales, private wealth advisors, and we've got one of the largest teams of research analysts in the country. We've got 6 publishing analysts between here and Sydney. And Canaccord was ranked #1 in Australia in metals and mining ECM in 2020. And just you can see the chart on the right-hand side. Just want to highlight the number of deals. 111 deals is a huge amount. You've obviously heard the Canaccord name around a lot this year. And that's a real testament to the hard work the guys and girls are doing in the background. So, happy to speak to everybody. We've got a booth outside, so come see us at some point over the next couple of days. So just want to talk about a review of 2020. How many times am I going to say COVID today? I suspect there's going to be a bit of a running bet as to how many times that word comes out, maybe between me and everyone. But look, this chart shows the 2020 performance of a selection of commodities and gold. As we said, the year was dominated by COVID, following the lows in March and April. The market actually performed very well, considering the ASX Metals and Mining Index was up 17%, and to compare, that was up 25% in 2019. So doing not too bad there. And the ASX Gold Index was also up. It was up 8%. Strong commodity performances include iron ore. Iron ore was up 70%. NdPr was up 55%. Gold up 25%, reaching all-time highs. And that's its best performance since 2010. Base metals in general were very good, with copper up 26%. And uranium was up 20% as well, which is great. Lithium found a floor, we think. It was the only one in negative territory, but it seems to be rising now, and I think we're going to see in 2021 a bit of an uptick in the lithium space, so that's really positive as well. And there was a number of key industry themes that will follow us through into 2020. So look, like most businesses, we like to measure our performance. And looking back at what my colleague Red Spencer delivered last year, he was up here in this position. He called it well. He made some excellent calls. He called a bottom of lithium. He called good performances like copper. He saw that gold was going to rally. So all in all, I think did a really good job in calling that, and hopefully we can do that again today. Perhaps underestimated the extent of COVID, but geez, who's to know what was going to hit us 12 months ago when we were standing here. So far in 2021, COVID still prevails, but we seem to be managing it very well domestically. Vaccines have started rolling out globally, and I believe the Pfizer vaccine arrived in Australia yesterday, and that's going to be rolled out from next week, which is great to see. We've seen a weakening US dollar amid stimulus plans. We've seen gold continue to ease since the highs in August 20, but that's expected to push gold higher, and with the weakening dollar. Perhaps it was overbought initially and oversold, so we kind of just need to find that balancing point. We've also seen, battery materials like lithium stocks running very well. There's demand there, but there's not so much supply coming online, and perhaps there's no price incentives right at the moment. But we saw Piedmont and Tesla do that deal last year, and that obviously sent the Piedmont share price rocketing, as you can see on the green line on the bottom chart there. So furthermore, into 2021, we see a strong post-COVID economic recovery, and that's being driven by China and US having really high demand for materials. We see continued weakening in the US dollar as Biden rolls out that $1.9 trillion stimulus. But I suppose the caveat is that that weakening US will mean a stronger Aussie dollar, so we might necessarily feel all the impacts locally. Key themes, we touched on it earlier on. ESG is, it's a huge theme. We get calls from funds all the time about it, and typically it's at the bigger end of town. But we're now seeing it dribbling down into the lower market caps, and funds are interested in knowing what everyone's doing from that ESG point of view. We're obviously going to have to adapt and live with COVID, and I think we're doing an excellent job locally. I don't think there was much impact felt locally in WA with the lockdown last week. So that was really good. M&A is a key theme, and that sort of flows into the lack of discoveries. There has been some great discoveries recently, but this exploration spend just isn't at the same level as it used to be, and perhaps M&A is sort of taking some of those dollars from exploration and putting into inorganic growth. And then, are we going to see skills shortages? With borders remain closed, and ability for professional staff to travel around, is that going to impact the industry as well? So there's sort of a couple of key things. But look, in general for 2021, we expect mines to return to that pre-COVID level. Gold to renew its ascendancy, more so in US dollar terms, I think. We think copper and lithium will outperform. And we see a continued recovery in base metals, especially those associated with the battery materials. So we said lots of nickel as well. So just looking a bit more at gold. So we remain very bullish on gold. We expect the narrative to continue to shift from a pandemic-driven safe haven demand to that hedge against inflation. We expect US monetary and fiscal policy to remain accommodative in 2021. And there are sort of the view that the Fed is moving to that average inflation targeting regime. However, we expect that the stronger Aussie to US dollar, so rising gold may not be seen to benefit us as well in Australian dollar terms. Look, the breakdown in historic positive correlation between the US dollar gold prices and Aussie dollar helped us in 2020. You'll see the sort of the gap between, maybe I'll highlight it here, the gap between US dollar gold and Aussie dollar gold helped us here. We sort of was quite volatile through this period. It got back on track, but now we're seeing it the opposite now. So we're seeing less of a benefit in Aussie terms because of that weak US dollar. But look, since August 20, the stocks we covered, we've seen an average of 27% decrease in the valuation among the producers of gold. And that's versus an Aussie dollar gold price decrease of 16%. So there's a little bit of a miscorrelation there, and that could be related to the US dollar. And we're seeing it even more so in the sort of more junior producers. So we're now more than 10 years into an Aussie gold bull market. And are the Aussie stocks accurately reflecting the Aussie gold price? You'll see the dark blue line is the, wrong way. The dark blue line is the ASX gold index. So we're at the sort of same levels we were back in 2011. Yet the gold price has, pretty much doubled. And so what's that really saying is, is it accurately reflecting is the valuation of the gold stocks reflected in the Aussie dollar, or are they cheap, are they overpriced, or is it about right? I think there's excellent value in some of the Aussie golds right now. And so, in any case, we're encouraged by the investment in exploration, and hopefully that'll lead to more discoveries. The easy pickings are gone though, and we're sort of seeing a lot of people resorting to sort of near mine opportunities. I mean, the best way to find a mine is to look right beside the mine. But there are some new discoveries and there's some excellent things out there. And we think we're going to see a balance of new discoveries in new terrains, offshore perhaps, but also near mine extensions and going back to old mines and sort of seeing if they're economic at depth. So just on the base metals and bulks, they've performed well in 2021 so far. And that's on the confidence in a global economic recovery. And it's driven by a surge in demand, particularly by China. And that's there's a coordinated fiscal stimulus and a strong market sentiment. And we've seen the likes of cobalt and tin even perform very well recently, which is good to see. Canaccord, we've got a preference for copper right now. There's favorable medium supply and demand fundamentals. There's potential for near-term supply shocks. So Peru and Chile are seeing elections and labor force negotiations. So that's going to impact the supply of copper, we think. And there's just that positive investor sentiment in the space. Interestingly, like other EV stocks, like I pointed out of lithium there, they've moved sort of really in that green economy, but we've yet to see that materialize in the copper. So we expect that to come soon. Look, on copper, we think the right ingredients are there to push it higher, and particularly if you look at something like inventories, they're at the lowest they've been in 5 years, and that's really pushing the copper price higher, as you can see. And there's obviously a lot of investor euphoria. Everyone's sort of coming up and asking, "Oh, what copper stories do you know about?" And there's really a lack. There's a lack of good copper development stories out there. There are a few, but there's not a lot, and the weakening US dollar is going to play into this copper price as well, we think. I just wanted to point out just the copper TCs. There are, decline to historic lows, indicating that there's, limited concentrate availability. And then anecdotally, just with the Chinese Lunar New Year just happening, We're hearing that there was, due to COVID, there was travel bans within China, and usually there's a lot of movement of people around, and that just didn't happen. And so people stayed back and manufacturers remained open and actually were eating into their supply of copper. So that's sort of all playing into its part in there. Just going to run through a couple more commodities and their outlook, and I know I'll move on to the exciting part in the explorers. But look, iron ore benefited from, well, what we think was a perfect storm. Record steel production in China, coupled with supply concerns for Brazil and to a lesser extent Australia. And the stimulus we think will drive more demand going forward. Vale struggling with shipments due to the tailings dam issues, and obviously Brazil was gripped with COVID. And then I suppose to a lesser extent, sort of cyclone activity up in WA was creating some sort of concern, we believe. Just touching on lithium, and I'll move on to NdPr briefly as well. But look, we're seeing a recovery in pricing and an improved demand outlook for lithium. We're seeing a thematic shift to the electrified transports, and there's lots of government incentives to do so. We believe the price isn't quite there for a supply response, and we saw that in a lot of the December quarterlies. And there's new capacity at the Kemerton and the Kwinana plant coming online, but we won't see that till 2022, 23. And so we believe that the demand is going to be solid and drive the price up in the near term. Just looking at rare earths, they're obviously benefiting from that EV and renewables thematic as well. I think in the longer term, it's the neodymium magnets that are increase that demand over the sort of a 10-year period. But I suppose in the short term, we're seeing conventional auto accessories and industrials that are driving NdPr. And that's sort of where the growth is in that sector. But look, this certainly isn't in my wheelhouse. We've got an excellent team of battery materials experts in our Sydney office who would be more than happy to talk to you guys further about those spaces. And we've got a number of papers at our desk as well, our booth out here, so you guys can grab them and have a bit of a read. So just quickly moving on to an area that's closer to sort of the work I do. I specifically look at the junior explorer developers. And really, the gold project development pipeline is thin. This isn't an exhaustive list. There's obviously more to come. But I just wanted to highlight just this middle area in the middle, the developers. There's not many developers coming online, despite the really high gold price that we're seeing. Maybe Orbanda actually should be in a producer. I think it produced its first gold bar last week, so congratulations to them. But really, there's not a lot in that developer space. But the positive is that there actually are a lot of guys delivering resources. This is a list of, I think it's 55 explorer developers that we currently look at. And it's just positive to see that there's lots of resources being defined. High grade to the right, lots of ounces up the top of the y-axis. And we're sort of splitting them out based on their approach. Is it open pit? Is it underground? Is it something in the middle? But great to see that there is a growing pipeline of people in that explorer developer space, hopefully moving into that studies phase. And some of the guys here do have some studies out there. Just wanted to touch on the exploration spend. We are seeing people or companies putting out new resources, which is great. But the data suggests there's less money being spent on exploration. And this is seen here. 2020, I think it was slightly up if I look right. Yeah, a little bit up on 2019. Is that because we didn't explore enough in 2020 or weren't able to because of COVID, perhaps? But I mean, what's going on there? Is there more M&A happening so the dollars are not going into the ground, they're just going into acquisitions? Is exploration getting cheaper? Are we drilling less holes because we're getting smarter and we don't need to actually drill as much to understand? But the fact is there are less globally significant discoveries being made. There has been a couple, but less so than we've seen in previous years. And sort of drawing into that, like what trends are happening here? There seems to be a correlation to the underlying commodity price. So what's hot? In the top left, we've got gold. You see the gold price. When the gold price was high in 2011, 2012, there was lots of money spent. That makes complete sense. But you'll see 2019, 2020, there's this gap. And what's going on there? Is this filled by M&A? And so people are favoring M&A over rolling their sleeves up and actually exploring, perhaps. To the right there, we've got nickel, and below we've got copper. I think it's seen less so in those stocks. In that commodity, that there is money being spent accordingly. But I thought the interesting one when I was looking at this data was lithium. There seems to be a bit of a lag. So 2015, you know, 16, 17, lithium was running. It was the first cycle. But not a lot of money was being spent. And I was like, why is that? Why was there a lag? Why did all the money get spent afterwards? And I mean, I don't know, like I've been in Australia 15 years. I class myself as an Australian trained geologist, but didn't really know a lot about lithium. And perhaps that was the case, that people were sort of coming up to speed in 16, 17 on lithium and sort of said, all right, let's acquire projects, let's go spend. And we saw that spend happening in 18, 19. But we're in a premier global lithium jurisdiction. And so I think we've got all the brains and the smarts here now. And I think in 2020, 21, we'll see you know, people taking advantage of that buoyant lithium price, hopefully. And then just, you know, where are the discoveries? This is a slide that was here last year, and we've updated it for this year. You know, congratulations to De Grey and Chalice on your discoveries. Perhaps Hemi was discovered in late 19. I'm not quite sure, looking at Phil there, trying to, yeah. So, but we kind of, the world woke up to it in 2020. So there are some meaningful discoveries being made, and congratulations to those guys doing it. I will note there are some quality emerging juniors with some excellent, you know, couple of drill holes into, you know, burgeoning discoveries, and hopefully they'll be on the chart next year. So there is some really nice things happening out there. And that kind of brings me into what I thought, you know, global hotspots, I suppose. It's what areas are we looking at? This isn't, you know, there's far more than this, but I just thought I'd highlight a couple of interesting areas. Newfoundland, there's heaps of Canadians now in Newfoundland, and there's one ASX company in there doing really well. And so there's lots of activity in that part of the world. Moving into Ontario and Quebec, there's a couple of Aussies in there chasing some high-grade gold in historic regions. Western US, there's some lithium borate and potash work going on there, which is, you know, exciting to see, given what we're seeing in the EV space. South American gold, I thought, was quite interesting. There's been some really good drill results coming out recently, and sort of keeping an eye on that space to see what's going on. West Africa, there's always work going on in West Africa, some exciting, you know, new virgin discoveries. We've seen a bit of activity in Guinea, the Sagiri Basin, some really nice work going on there, and a couple of juniors playing in that space. And similarly, just further north, the Senegal-Mali shear zone, there's some really exciting discoveries being made there. So that's something that we're watching closely. More closely to home, over in New South Wales, I suppose Alkane had the Boda discovery in that sort of Lachlan region. You've got Cobar next door, where Peel is doing some really good work there in its copper exploration. And you've got a whole raft of juniors have now been exploring there too. So that's really exciting sort of area that I haven't sort of previously looked at. Obviously in the Pilbara, we've got De Grey blazing the trail for everyone up there. We've yet to see a junior stand up with sort of similar results, and so looking forward to seeing that coming out this year. It's drilling undercover, so it's a little bit more challenging, and it's a new mineralization style for the region, so we'll wait to see what happens there. Leonora, there's lots going on in Leonora. I worked in Leonora for 5 years, so I know the area quite well, and there, you know, we saw NTM and Dacian have that merger. And you know, there's a couple of other developers or explorer developers in that space that we're waiting to see put their hands up and tell us what they can do, whether they have a standalone opportunity or is this part of the world ripe for consolidation. And then finally, very close to us here in the southwest, Chalice has really blazed the trail for a sort of a whole new terrain and a whole new style of exploration. And there's an absolute raft of juniors pegging heaps of ground out there, which is really, really exciting. And yeah, we're trying to pick the best ones, I suppose, among that group. So look, just to finish off and to summarize what we're seeing, we've got a positive outlook for 2021, and that's on the prospect of a post-COVID virus stimulus. We see that gold bull market remaining, and there's a macro environment backdrop to support that with the sort of hedge against inflation and that weakening US dollar, as I said. We think copper and lithium are going to outperform, and that's sort of in that green EV revolution, and we think nickel's going to follow. Key industry themes: ESG, ESG, ESG. It's very important, and we're getting lots of questions from funds, particularly overseas funds, asking about that and wanting to put their dollars into companies, but wanting to tick the box. It's not just a box ticking exercise, but wanting to make sure they've covered off on that important issue. And I'm sure we'll hear a bit more about it over the coming days. You know, we're going to have to work with COVID. Vaccines are being rolled out, but I think we will still see, snap lockdowns happening and how we react accordingly. I think the state did really well in the last couple of weeks, particularly the industry, in being able to work with that. M&A is a theme we see all the time, and we're going to see that. And does M&A eat into exploration spend? Perhaps, but what we're seeing is there's a distinct correlation between commodity prices and expenditure. So look, a positive macro backdrop for most of these key commodities in 2021, when you add in that there's, very positive sentiment in the equity markets. And I just think that's, perfect conditions for exploration. So look, I wish everyone here the best of luck in 2021. Get out, kick some rocks, drill some holes, make some discoveries, and we'll all benefit from it. So best of luck. Thank you.
Thank you very much, Paul. Yes, a bit of light on the horizon with the arrival of the Pfizer vaccine against COVID. Pfizer, of course, a worldwide drug company. They've also got a branch in Ireland where they make Viagra. It's known locally as the Pfizer Riser. Since joining Chalice Mining in late 2017, Managing Director Alex Dorsch has led the company through an exceptional recent growth period and was recognized as the 2020 New Emerging Leader of the Year. Alex has diverse experience in a variety of leadership roles across the resources sector as a management consultant, engineer, project manager, and corporate advisor. Please welcome Alex.
Thank you and good morning to everyone. I'll be talking to you about Chalice Mining today, a name that probably needs no introduction, so I'll get straight into it. Our usual forward-looking statements and disclosures, I am quite careful about what I say, but please read this in your own time. It's available on our website. So Chalice is a unique offering in the space. We're an exploration specialist. We've got a globally significant discovery just outside of Perth here. It's what we consider Australia's first major palladium discovery. It's called Julimar. And it's emerging as a very large strategic deposit of critical clean energy metals, which, as you've just heard from Paul, are in tightening short supply. And there's a real push for the Western world to secure these metals on friendly home soil. So we're highly leveraged to the large-scale battery adoption with obviously nickel, copper, cobalt. We're also leveraged to the hydrogen space, so we're a bit like being diversified in a single ore body. PGEs have a very, very important role to play in the hydrogen economy, so expect to hear a lot more. And for those who are following the space, you probably see platinum prices is going vertical at the moment for that exact reason. We're also active all around Australia. We've got the first mover advantage in our new province, as Paul said as well. The southwest of WA, we think is basically an untouched part of the best mining jurisdiction in the world. So there's a huge amount of upside to go looking for more examples of Julimar. We've got large exploration holdings in Victoria and up in the Kimberley. We've got 7 rigs drilling for the company at the moment across 2 of those projects. We're well funded with over 140 million in cash and investments, and 2020 was a fantastic year for shareholders, over 20-fold return over the 12 months. So Julimar, it's a brand new discovery, as I said, March 2020, so only about a year old now. It was a first hole discovery as well, which makes it even more special. As you can see there, high-grade palladium, nickel, copper, cobalt. It's 26-kilometre long intrusive complex with only drilling down the very, very southern end thus far. We've got 6 rigs drilling on that southern end, targeting a mineral resource in the middle of this year. One of the challenges we've got is this thing just keeps getting bigger and bigger. Pyramid Hill in Victoria is our big greenfield gold holding in the eastern part of Australia. 100% control there of 5,000 square kilometres. We're in the sort of stone's throw away from Fosterville Gold Mine, which everyone would know is one of the best gold mines in the world at the moment. We're also active up in the Kimberley. So we dare to go drill holes where no one has drilled before. And so far, obviously, in the last 12 months, that's proved an exceptionally good strategy. So this is our share price performance over the last 12 months. Obviously, congratulations to the holders that bought in at the beginning of last year. You can see the catalysts throughout the year, from the discovery in March. Everyone will recall the COVID period there where the market actually bottomed on the day we announced our discovery, which was quite fortuitous. We also raised over $130 million in the space of about 7 months. And as you can see, they're now trading at about $4.50 a share, market cap of about 1.5 billion. Our register is dominated by our chairman here, as well as a growing list of institutions, largely in the east coast of Australia. We've got a tight capital register, even having raised over 130 million last year. We do have some investments in some strategic holdings in other companies. And obviously growing institutional support means a whole new dimension and a whole new growth phase for the company coming up. So talking about the discovery, this is no doubt probably familiar to most who've heard of the discovery. You can see Perth there on the map. We're 70 kilometres outside of where we are here in a bit further from Fremantle. But obviously, you know, being that proximal to a major city comes with fantastic infrastructure advantages. You can see this quite standout magnetic feature there in the centre of the page, the Julimar complex. It's a 26-kilometre long magnetic feature, which we believe is mafic, ultramafic intrusive geology. So we've named it the Julimar complex. And obviously we've made a major discovery at the very, very southern tip of that complex. We've got 100% control of it. We have actually started work in the forest area immediately north of the discovery. So we're doing the first pass of exploration activities as we speak over the 24 kilometres of untouched Julimar complex. We've got also 8,000 square kilometres of additional licence covering the entirety of the West Yilgarn province, with the exception of a few gaps, obviously, but we've really had the first mover advantage here to leverage our discovery. So our discovery really, it's hosted in the Gonville intrusion, and really this has the makings of a world-class deposit in itself. It's not the end of the story. Obviously there's an arbitrary boundary at the northern end of Gonville where we just go into state forest and we just haven't been able to drill in there yet. But in saying that, Gonville is a 1.6 kilometre long, about 800 metre wide intrusion. It's open obviously to the west and to the north, as I said, into the state forest. We've got 11 separate high-grade zones, a mixture of PGE nickel cobalt zones, and then really PGE copper zones. So slight subtleties in the deposit itself. All of them remain open. You can see all the open arrows there. And then on top of that, there's about 125 isolated high-grade intersections that we haven't yet wireframed and included into one of those zones. Surrounding high-grade mineralisation, there's widespread disseminated low-grade palladium and platinum mineralisation running from 0.5 gram to 2 grams per tonne, and that we've proven down to 800 metres below surface. So you get a sense here there's very, very shallow high-grade mineralisation, and then we're pushing the low-grade down to 800 metres deep. So you can imagine the scale of what we're talking about here. On top of fresh rock, there's also a weathering profile about 25 metres thick that's enriched in PGEs as well. So it's a bit like almost a separate ore body sitting on top of the deposit in fresh rock. We've drilled about 55,000 metres. We do have assays pending for a number of holes. We're obviously continuing to drill with 6 rigs. We think it's 160,000 metres of drilling, but probably going to end up doing much more than that. One of the challenges, as I said, is that the deposit just keeps growing. So looking now at the 11 high-grade zones, you've got this mixture of these red zones which are internal to the intrusion. So you're looking down on the intrusion on this image, down to the southwest, down the dip of the zones. So you can sort of get an appreciation of their width. And also on the right-hand side there, you get an indication of the extent of each of those zones. So they're hundreds of metres of strike length, hundreds of metres of dip extent, and you can see obviously open in most directions there from looking at that page. You've got the orange zones at the eastern part of the intrusion are more the copper dominant, platinum and palladium zones, whereas the red zones are more palladium dominant with also a good amount of nickel cobalt in some of those zones as well. So speaking of the palladium, nickel, copper, cobalt rich zones, these are in some places up to 40 metres thick. And you can see there that figure there is showing about 350 metres of dip extent to that G2 zone. So you get a sense of just how extensive the zones are, and you can see some of the highlighted drill intercepts there through these zones. They're quite spectacular grade. Grades up to 8 grams palladium, occasionally up to sort of 1.5 grams platinum. Some good grade nickel in the mix as well. So the ore body, as I said, is a little bit diversified in that it's got a base metal component as well as platinum and palladium, and obviously open as you can see there down the dip and along strike. On the eastern side of the intrusion, you've got these orange zones, the G4 and G11 zones. Again, very wide intersections, 1,000 metres of strike each of them, and up to 430 metres of dip extent. We've got 82 intersections in these two zones now. Again, you can see dominated by palladium, but also some high-grade platinum. you know, an intersection 50 meters wide at 1.8 grams palladium, 0.9 gold, 1.1 copper. So you can see slightly different mineralogy, lower nickel, but higher on the copper, and in some cases, you know, rich in gold as well. So it really does have a bit of everything, this deposit. Probably the most exciting part of, as I mentioned, you know, we're just exploring on the southern end of this complex thus far. Just everything I've just showed you is just that blip at the bottom of the bottom left-hand side of the page there. On the left-hand side is a magnetic image of the complex. You can see that the magnetic image is very similar as you go to the north. On the right-hand side is probably the most compelling part of this project is the EM response that we're seeing. So we had the benefit in September of being able to fly airborne EM over the discovery, as well as over all the other untouched area to the north. And you can see there we've got this Hartog EM anomaly that extends over about 6.5 kilometres, which has yet to have a drill hole in it. So you can see the sort of scale that we're really in the top echelon of mineral potential here. You can also see these more subtle EM responses about 10 and 18 kilometres to the north. So imagine sort of the distance between here and Perth CBD. That's the sort of scale we're talking to here in terms of, you know, a mineral complex. So initial on-ground activities are underway here, and obviously we're not far away from looking at the first results of the soils and on-ground EM. We just released this morning some initial metallurgical test work that's really shown that we've got high palladium, nickel, copper recovery into 2 commercially attractive base metal concentrates. So we're producing, in that lock cycle test work, we've produced a copper PGE con, a 24% copper, about 173 grams per tonne of palladium in that concentrate. So a very, very valuable product for context. Obviously palladium trading at the moment at a premium to gold, it's about $2,400 an ounce. So you can imagine sort of what 173 grams or about 8 ounces of palladium is worth in that concentrate. We're recovering also palladium, platinum and nickel into a nice rich nickel concentrate as well. You can see there the total palladium recovered is about 86%. And platinum 74%. Obviously a lot of optimization work yet to go here, but this is an extremely encouraging sign here that we're looking at simple flotation techniques that are widely used around the world. That we think we can concentrate these metals into very commercially attractive, separate, marketable products. We've also got very low impurities. We haven't seen all the assays from all the concentrates yet, but it looks to be, you know, there's nothing in there that's a red flag, no arsenic, no cadmium, things like that thus far. We're also looking at the oxide mineralization where we're getting, you know, a good portion of that palladium and gold coming out of that weathering profile as well. So it's got the makings of a separate project almost in its own right. So the PGEs, as I said, critical clean energy metals, 70% at the moment go into your exhaust system in your internal combustion engine. At the moment, if you have a hybrid or a petrol engine, you will have a palladium-based catalytic converter in that engine. And that's because the emission standards have really become stricter and stricter. And with Volkswagen's Dieselgate scandal a few years ago, that really put a line through platinum and has basically necessitated the move to palladium. So obviously EVs are coming, but until they're really in mainstream adoption, we're likely to have hybrids for a very long time. And that's really put the strain on palladium. Obviously the EV thematic, very dependent on things like class 1 nickel, cobalt, copper. You know, hybrids very much dependent on palladium. So the price, as I said, about $2,300 US an ounce. I think it's actually closer to $2,400 US an ounce this morning. What's most interesting though about PGEs and what is just emerging at the moment in the market is really the criticality of these metals if we move to the hydrogen economy. So producing, purifying, and then ultimately converting hydrogen into electricity through a fuel cell requires lots of PGEs. So at the moment, the vast majority of PGEs come out of Russia and South Africa. So there's obviously a big push, and that makes our discovery, you know, even more special being in a Western country. So we've got the potential here to deliver significant economic diversification as well for the Wheatbelt region. We're being very proactive in terms of, you know, engaging with the local community. We're also utilising, you know, low impact techniques to make sure, you know, we don't do the wrong thing in that state forest area. We're working to minimise our impact as we go. In terms of the schedule ahead, as it shows there at the top of the page, the activities in the state forest have commenced. We do require a second stage approval to go drilling. We're hoping that we can achieve that by the middle of this year. And obviously the RC rigs and diamond rigs at Gonville will keep hammering away probably until September, October this year. As I said, we really haven't found the limits to the ore body yet, so we need to keep drilling, and that obviously has the potential to push back that schedule slightly. We're doing things, obviously the phase 2 metallurgical work is ongoing. There's a long road ahead to optimise the metal recoveries and obviously look at payabilities, but all that work is ongoing. So I think you've got the picture there. We've got a world-class discovery at Julimar, a fantastic one for a company based in Perth. We've also got drilling going on in Pyramid Hill in Victoria as well, so don't forget about that part of the business. And a major greenfield discovery, money returned to shareholders in the history of the company, so an exceptional track record. So that's Chalice Mining, and thank you very much.
Oliver Kiddie is the Executive Director of Legend Mining Limited. He's a geologist with over 18 years experience across exploration, development and production across Australia and internationally. He has extensive experience in base metal and gold exploration through senior management and executive positions, most recently as GM Exploration for the Creasy Group. He's a member of the Australasian Institute of Mining and Metallurgy and a member of the Australian Institute of Company Directors. Please welcome Oliver Kiddie.
Thanks, Jerry, and thanks, Stu and Jackson, Prue and the team at RIU for putting on another great conference, or what will be another great conference, and congratulations on 20 years. Alex and myself have ticked the box by bringing down the age demographic for the first couple of speeches anyway. Traditionally, Mark Wilson, our MD, would do this presentation. Mark would be sitting there nervously in the audience, I think, somewhere, and he's handed over the reins, so hopefully I don't put it through the running rail. Our disclosure statements, a copy of this presentation is available on the website. A corporate snapshot of Legend. We've got 2.7 billion shares on issue. Our major shareholders, IGO and Creasy Group, both joint venture partners. Number 3 on that list is David Bailey. That's the Bailey Group. Dave is a high net worth here in Perth. We thank Dave for his continued support of Legend. Number 4 is Mark Wilson, our MD. Now, Mark's shares have all been purchased on market after tax dollars. Those of you who know Mark know that he's a bit of an avid racehorse follower, and no doubt he's given up the opportunity to probably have 1 or 2 potential Group 1 winners, but he's chosen to back a horse called Legend, and I think that speaks volumes. We've currently got a market cap circa 320 mil. We've got cash of 27.2, but you can add another 2.6 to that, which we've just received as part of our R&D receivable. Options, we've got 224 million options all in the money between March this year and September next year. We've got no debt. The directors and executive management, they're a mixture of technical, corporate, financial, HR and managerial experience. Small, dedicated team at Legend, all driven by success, and I think most importantly, we've all got skin in the game. Legend prides itself on its stakeholder relationships. This is reflected by our updated ESG policies, which can be found on our updated Legend Mining website. So why invest in Legend? Well, it's in the name. The location, we've got just over 3,000 square k's of underexplored nickel terrain, supported by excellent infrastructure and services. The experience, corporate, technical, and supported ably by our joint venture partners. The growth, obviously with the Mawson discovery and a pipeline of highly prospective targets, which I'll talk to in this presentation. We're enabled, we have the right people, strong cash position, and as Mark Wilson has often said, we're going the distance. Nickel, it's the future-facing commodity, and delivery. We'll deliver share price appreciation through our unwavering approach to systematic exploration. You'll never see Legend going hammer and tongs, wasting money, shareholders' money. It's always systematic. Just a quick word on nickel, the forward-facing commodity. This was covered off pretty well by Paul, but really this slide is covered off by the two graphs on the left-hand side. We're looking at an increase in deficit, an increase in nickel price, supported by the tailwinds of the EV evolution. And this is all around the class 1 nickel. And the class 1 nickel is what we've discovered, this class 1 sulfide nickel we've discovered at Mawson, which we aim to discover more of in 2021 and potentially add to with some of our regional targets, which are really genuinely exciting. So where are we? The Rockford project is located in the Fraser Range of Western Australia, 120 kilometres north of Nova. It's 100% within the Fraser zone, and we're targeting magmatic nickel, copper, cobalt mineralisation. We have over 3,000 square Ks, supported by really fantastic infrastructure, which I think isn't mentioned enough, specifically the Trans-Australia Railroad, which runs right through the southern portion of our tenure. Mawson is a mere 30 Ks from this railroad. So why explore the Fraser Range? Well, Newmont were here in the 60s looking for nickel, with the analogy being the Thompson Nickel Belt in Canada. We fast forward to 2012, Sirius, Mark Bennett, they make that fantastic discovery, which was Nova. We fast forward 9 years to today, and there's a total of just over 300,000 tonnes of contained nickel, which has been discovered in the Fraser Range. There's a smattering of new occurrences, but in comparison to the same size belt, the Thompson Belt in Canada, there's 2.7 million tonnes of contained nickel. We believe at Legend that the Fraser Range is a compelling potential world-class nickel belt. So who are the main players in the Fraser Range? Well, there's 4. Legend, us, obviously well cashed up and got a dominant land position. We effectively hold 50% of the prime Fraser Zone real estate. Creasy Group is private, actively exploring. IGO, obviously owners of the Nova Nickel Mine, actively exploring in their own right, joint venture partner of ours. And Galileo, which was an IPO spun out of the Creasy Group, well-funded and actively exploring. We'll look now at the flagship, which is Mawson, which was our discovery made in December 2019. We'll focus specifically on what we've called the Mawson Intrusive Complex. The Mawson Intrusive Complex is a 16 by 6K area of a cluster of intrusions, Mawson being the central intrusion. The fertility of this Mawson Intrusive Complex is really just starting to rear its head now, most notably with the release of the RC results we released a couple of weeks ago, specifically the holes down here to the south, hole 41, RKRC 041, which is hit and high MgO leusolite, which is identical effectively to the host of the mineralisation at Mawson. So we think the prospectivity from the 16 by 6 cluster of intrusions there is very, very high. So if we look at Mawson so far, Mawson itself is a 2.4 by 1.1K intrusion, open in all directions. The area of interrogation to date has been small, specifically with primary deep drilling, but all indications are that we're dealing with a very large mineralised system. We see a significant amount of smoke, as you can see on that diagram on the left, and this is supported by some significant fire. Specifically, our best hole to date, which we actually drilled for metallurgical purposes, returned 31.1 metres at 2.8% nickel, 2.04 copper and 0.15 cobalt. This is supported by many other intercepts of massive sulfide, but also importantly, large disseminated halos. And that really is a hallmark of these big systems, is these large disseminated halos. The geological model is being developed, is showing blue sky potential, and this is really highlighted by the enormous upside given from the blinding effects of the stratigraphic EM plates. So to 2021 and the program, we've got 3 target areas which we'll be interrogating with 2 diamond rigs beginning in March. Now this has been enabled for the first time. We haven't been able to support more than 1 rig because of the water restrictions. We carted our water from Kalgoorlie. We've recently signed a water agreement that allows us to pipe water to 2 rigs across Mawson, which is a massive logistical hurdle which has been ticked. We have over 10,000 metres planned, and we're specifically chasing the source of the mineralisation identified at Mawson to date. The tronolith which we have identified to date occurs here on the left-hand side, and we've also in the limited drilling encountered the same tronolith here. We think the tronolith actually bifurcates and joins to the southern area, and that's the main priority area which we'll be kicking off the drilling beginning in a couple of weeks' time. A quick word on the metallurgy. We released this to the market last week. Basically, we did some cytometallurgy to get an understanding of how the massive material at Mawson behaves. We all had a fair idea of how it would behave. It looks exactly the same as Nova, it looks exactly the same as Silvernight, but we needed to get the work done. Effectively, we've been able to produce a separate nickel and copper concentrate, excellent recoveries, high grade, saleable con, individual cons. Optimisation, given this is cyto, will definitely yield improvement. And like the environmental level 1 survey we undertook last year, it's another de-risking mechanism for the long lead items, which has been ticked for the Rockford project. Just turning to our regional targets. As we zoom into our portfolio here, you can see Mawson on the eastern side of our tenement package. You can see Magnus, Octagonal, Shackleton, Worsley, Crean and Hurley, which are the other prospects we've defined to date. Mawson sits on a structurally different package to the stuff in the west, but the same fertility. Mawson is effectively a living laboratory for us, which allows us to extrapolate our learnings to these regional targets, which gives us a really competitive edge. Part of a project scale analysis has actually generated over 30 new targets across our Rockford project. This proves that outside Mawson, we're not just a one-trick pony. These will be followed up with our moving loop and aircore drilling, and the most compelling of these targets will be tested with RC and diamond drilling during the field season. We have $4 million earmarked for expenditure for 2021. Some of our aircore success was released to the market in December. And what this really does is validates our exploration approach. Hurley and Crean are fast becoming really highly ranked targets. They'll be followed up with additional moving loop, fixed loop at Crean, followed by some infill aircore, and pending heritage clearances, we will be in and diamond drilling both Hurley and Crean in April this year. So Bill Bradley, the US politician and professional basketballer, said, "Ambition is the path to success. Persistence is the vehicle that drives you." So we're a small team, as I touched on at Legend, but absolutely dedicated and driven team. And we're ably supported by some really high caliber, recognised industry professionals. The Mirror Geoscience, Southern Geoscience, the John Stannings of Model Earth, GEM Geophysics, Dr. Nigel Brand at Geochemical Services, Tony Crawford, Dick England, are just as excited about what we've uncovered at Mawson as we are internally. So looking at the project pipeline and the work plan for 2021, target generation will obviously be ongoing as we uncover, drill more, collect more data at Mawson. The 3D model evolves and our targeting evolves. Diamond drilling, as I touched on, will kick off in 2 weeks' time with the first diamond rig turning up and the second one shortly after at Mawson. We'll be following up with downhole EM. Phase 1 metallurgy is being complete, as I touched on. Pending statutory approvals will be underway with our moving loop regionally, followed up by our aircore program, and we'll be diamond drilling and RC drilling at Hurley and Crean. So in summary, jump on board, become a legend. We've got the right project, the right commodity at the right time. We're systematic, persistent, and committed. We're well funded to execute. We've got the right people, both internally and externally, which I've touched on, and will continue to grow shareholder value. Thanks very much. And if you've got any further questions, please come to the booth and have a chat to the Legend team. Thank you.
Thank you, Oliver. Breaker Resources NL is a Perth-based gold explorer focused on discovering and developing large new gold deposits hidden by transported cover in WA's Eastern Goldfields subterrane. Executive Chairman Tom Sanders is a geo with over 35 years experience in exploration, mining and corporate management, predominantly in WA. He's worked on many open pit and underground mines with a strong emphasis on gold and nickel in WA. He has extensive experience in regional exploration and has published papers on nickel and gold deposits and on mineralization in WA's East Kimberley region. Please welcome Tom Sanders.
Thank you very much, Jerry. Ladies and gentlemen, thank you for the opportunity to be here. Firstly, I wanted to acknowledge my team, employees, directors. They're the reason I'm standing here. Okay, so this story is about a emerging greenfields gold district, 100 kilometres east of Kalgoorlie, in between Carosue Dam and Crag. It's a greenfields discovery hidden by thin transported cover. You can see, so you don't have to think too much, a few symbols there to summarise things. But what I'll try to do is, in this presentation, is give you the overview in 3 to 4 slides. Then I'll slow down and we can do a bit of geology and exploration, which is why we're all here, of course. The first thing you do when you find something is you want to know how big it's going to be and if you've got a mine. So our focus in the first 3 years was to drill in the order of 270,000 metres to understand this beast. And in the end, it's a very simple beast. It's a mini golden mile. And I know by using the term golden mile, people think, oh, that's a big step. But I'm not comparing the endowment, but I'm comparing the fact that we've got 3 strike persistent, and when I say strike persistent, I mean kilometric scale structures that are all mineralised. We already have a 2.7 kilometre single open pit that is still growing. The mineralisation in that is 150 metres wide and takes in multiple lodes, flat and steep, and we're stepping. Because we concentrated our early drilling to understand it, it's only in the last year that we've really stepped out to see how big this thing is, and we've been very pleasantly surprised. What we now have sitting below that pit, in fact extending out of it, is 2 kilometres of continuous high-grade mineralisation. Single planar that is not yet in the resource. So it's going to go underground. That 1.4 grams you see there is a diluted grade. I probably should have said, we've already got 1 million ounces, 80% of which is indicated. But that grade that you see there is designed simply to maximise the profit in an open pit environment. But this has the grade, which I'll show you shortly, to go underground. In the last year, as well as the 2 kilometres of high grade, we've had 3 shallow discoveries. We've identified that we have, in fact, kilometric scale continuity. And our air core drilling is telling us that what we're seeing is part of a 30-kilometre gold system. So it's getting quite interesting. We've got 4 rigs running continuously, doing essentially resource delineation, but also exploration. Upcoming catalysts, we have a resource plan for April this year, and the intention is to do incremental updates from now. And the objective, of course, is to establish a major new gold development. We already have a significant discovery. What we're doing, a significant de-risk discovery, what we're doing now is simply making it bigger and better. Now, to show you visually, all our RC and diamond drilling is shown here in little yellow dots, sitting on an air core image. Now, that air core image is generated from 2,000 drill holes. We sample the end of holes. But importantly, what you see there is not all of the anomalous stuff is drilled out. There are big areas that we haven't put an RC hole in. So this is extremely exciting. That 2.7 kilometre pit you can see in black, and as I said, it's going to go underground as far as I'm concerned. Third slide of the summary. Okay, we can see some high-grade shallow gold. It's going to be a big, very profitable pit. And then those red things are the part of the 2 kilometres of high-grade lodes that I mentioned. You can see some of the grades that we're getting below the resource in orange here. But really, if you look up the top, the grades you see up there are no different. So the grade of the resource is simply a matter, it doesn't reflect the inherent grade of the deposit, is what makes most money in an open pit situation. What we've done here is the typical Aussie thing is get in early, go hard, de-risk it, eyes on the prize, i.e. a mine. Now layered on top of that, we've had large US investors of the ilk of Electrum, Paulson & Co, Franklin Templeton come in to make this thing bigger and make it a robust, large gold development. We're well cashed up. The shares are still quite tight. I won't go into more detail on this. So, okay, now we can step back and do a bit of geology. This is a previously unknown district. No previous workings. What it looks like is pretty similar to what you see on the left here. The mineralised zone, as I mentioned, is in the order of 150 metres wide. It's persistent. The main deposit, 1/3 of it is on the upper part of a salt lake. No problems on water management point of view. So we found it by first principles. We're looking for the right structure, the right rocks, and then because we're essentially specialised, if you look, we'll be listed back in 2012, we listed to find new gold systems undercover. So this is part of that. So we use geochem quite extensively. When we pegged it, we liked the setup, and I'll go into some of the details of that discovery process. But we pegged a large area in several different stages. But what's most interesting to me is 2018, Wally Witt come along and said, well, what he said is, I think, yeah, what you're seeing over there is where we are is an extension of the Laverton tectonic zone. That's interesting because there's a lot of gold there. And what's framing his thinking, as I understand Wally, is that what he likes is he likes big structure, but importantly, he likes the mantle link. He likes to see the cyanites, the lamprifiers, because they are commonly observed around large gold deposits and probably linked. And the other interesting thing is, if you think about it, Wally's description of this is that Laverton tectonic zone is simply the eastern side of the same rift that the Golden Mole is a part of, and Paddington and St Ives. So I like that. So we're in the right area for a large gold deposit. What attracted us to this area is that we had two large converging faults, and these are domain boundaries. So we've got Keith Kilkenny on the left and the Crescent on the right. We've got operating gold mines to the north and the south. Okay, structures converge, that's great for gold. We got on the ground there, and historical chips we identified a fractionated dolerite. Now, academic work since then has said, oh, well, that particular dolerite's one of the most fractionated we've seen, probably second most in WA. That's interesting. So in the middle of two large converging shear zones with the right rocks, great start. Now on the left, we've got colour-coded RC and diamond holes, colour-coded by maximum gold on geology, and simply to give you a feel for structure. No, I'm not comparing the gold endowment. The pit we've got here is not the same width, but the same length dimension as the super pit. So it's going to be a big hole in the ground. And as I said, it is still growing. 3 stacked loads in the upper part being significant, that's where you get the magnetite. Upper part of a dolerite, exactly like the Golden Mile. But really, yeah, and these things go to great depth. But we are starting to see gold in other host rocks, and that's I'll talk more about that in a moment. But really, in a broad sense, these things are just slightly different waves on the same sea. St Ives, Plutonic, Darlow, Bellevue, Paddington, all shades of similarity. Okay, so this is a big strata-bound system. We understand the geology. We're chasing those structures and we're finding stuff. And I'd like to show you that. This deposit is already large. And here I'm comparing it in size, purely to set the size dimension in your mind. It is already of similar scale to Plutonic and Darlow. I said, well, that's a good thing for a company with a market cap of $70 million. With 2Ks of high-grade loads that aren't yet in the resource. That's okay. A reminder, this slide is more a reminder of, we started from scratch and we've worked this up, as you saw in the previous presentation, systematically. Only way to go. If you understand what you're about to mine, you've done a substantial amount of de-risking already. Okay, a bit more geology here. We've got steep lodes stacked, one on top of the other. Where they bend and they get tighten up, where they lock up. Over here it bends, it locks up. Where it locks up, that's where we get our flat lodes and our west lodes. And this is on kilometric scale. So we understand why the gold's there. And we're now projecting these golds into those air core anomalies, into the edge of the cyanide, which is magnetite rich, and we're seeing some interesting stuff. So we understand it well. This is simply to stress that what we are dealing with here is multiple stacked loads. Now, in the case of the Golden Mile on the right, you've got multiple stacked steep loads. In our situation, yes, we get multiple stacked steep loads, but we're also getting multiple stacked flat loads. So you're walking into an open pit where your mineralised domain, if you like, is 150 metres wide. That's very nice open pit material, especially when you throw in some of the grades that I mentioned. So excellent low strip ratio mining configuration. It's strata bound, surprise, surprise. interesting thing is when you chase some of these structures out of the magnetite-rich dolerite, which is where that gold is showing, stacked, you see the stacked flats, where these things intersect, we often get high grades. So again, new targets opening up. This is a 3D perspective of 6 kilometres of that, what is a large gold system in the early stages of delineation. Two kilometres of high-grade flats. Since we've put this out, we're simply getting more information that these things are continuous. You want to go underground mining, the first thing your concern should be is how continuous is it? Well, we've got 2 kilometres of continuity, and that's a fantastic place to start. And this is coming from a company that is, where the continuity has been criticised because it's not been understood. And we drilled 270,000 metres to understand it, and we're now starting to reap the benefits, and I think the share price will soon too. We get high-grade steep loads too. Now, okay, we're looking at a long section, it's a nice core there, but that little coloured image down the bottom there, that is the Penny West North recent discovery shown at the same scale. So this is big, it's got high grade, and it's in a good spot with extensively de-risked mining configuration, good metallurgy. I've got these drill holes colour-coded now. They're sitting on the air core image. We're doing resource drilling at Bombora, Crescent Copi to the north of that, and 2 emerging discoveries on and near the cyanide contact. That 9-kilometre system that I just showed you on that slide, well, our air core drilling indicates potential over 30 kilometres. So again, it is early days. So rounding up, we are relatively cheap in the marketplace, very cheap. A reminder here that we've done feasibility level de-risking. And a summary. This is a large deposit that's going to be a mine. It's been a long path, but interestingly, it is still early days and we have several upcoming catalysts. And thank you very much for your attention.
Thank you, Tom. Roger Fitzharding is a geologist with more than 20 years' experience in the exploration and mining industry. He's been working in Brazil since 2005. He's fluent in Portuguese. He joined Centaurus in 2010, coming from Mirabella Nickel, where he was a key part of the exploration, development, implementation, and operations team at the Santa Rita nickel mine. Joining Centaurus in 2010, Roger initially was appointed to the role of exploration manager before being appointed operations manager in early 2020 to oversee all exploration and study work associated with the rapidly advancing Jaguar nickel sulfide project. Please say olé e bem-vindo a Roger Fitzharding.
Muito obrigado, Jerry, and your Portuguese is very good. Good morning, ladies and gentlemen. I'm happy to be here today to present to you the Jaguar nickel sulfide project, which, as Jerry said, is located in Brazil and specifically in the Carajás mineral province, and why we at Centaurus think that this is a project that is setting up to be a globally significant producer of Class 1 nickel at a time when the EV demand is coming online. So earlier in the month, we updated our JORC 2012 resource, which now stands at 58 million tonnes at 0.95% nickel for a total of over 550,000 tonnes of contained nickel. Now, I think that's probably the third biggest nickel resource inventory on the ASX, behind producers. Our focus of the drilling over the last 12 months was to bring the indicated resource component up so that we can complete scoping study and deliver economic evaluation of the project. And we did that very successfully, and the indicated currently stands at 20 million tonnes for 1.12% nickel, which equates to over 200,000 tonnes of metal. All the deposits are open at depth and locally along strike. We have multiple growth opportunities, and we have 4 rigs on site with more diamond rigs planned to come in the coming months. And we've recently changed out our RC drill contractor who was underperforming with a new RC contractor to arrive on site in the next few weeks. The resource that we talked about here is in the hands of our mining engineers, and they are producing a mine plan that will underpin the scoping studies that will be delivered in March and April. So we've had to be very proactive in our management of COVID in Brazil, and we've invested a lot of money in making sure that we can keep the rigs turning and that we're keeping our guys safe and healthy. We've built a site, an on-site camp, which allows us to isolate all our field team during the week. And we have a full-time nurse who does daily testing. So we have had COVID cases, but I can proudly say that we've never had a spread of COVID within our organisation, and that has allowed us to keep the drill rig spinning. This is a quick corporate summary. Over the last 12 months, we've had a very positive change in the register with nickel-based metal savvy North American institutions like Sprott and Dundee increasing their holdings. You'll see there's a couple of research notes that have come out recently, and you can see them on our website at your leisure. The main thing to see here is our Brazil presence, and this is how we've been able to keep the project running. We've got Bruno Scapelli, who is an executive director and our country manager in Brazil, and he's offsite with Gaudius Montresor, who is our exploration manager. And these are the guys that have been able to keep the project moving forward while the Australian team hasn't been able to get onto site. Our board is led by Darren Gordon, and they have a vast experience in developing and operating mines, nickel mines, iron ore mines and gold mines. So suffice to say, we're quite bullish on the outlooking demand for nickel and the nickel price and how it's been, and mainly the demand for Class 1 nickel, and specifically clean and effectively mined Class 1 nickel. And the bonus for working in Brazil is that Brazil power comes from more than 80% renewables, and the majority of that is hydroelectric power. In the state of the Pará, there's multiple hydroelectric power stations that feed the power. So we believe at Centaurus that we will be able to produce a Class 1 nickel with a very low carbon footprint for this reason. So at Centaurus, our vision is to take this large resource and turn it into a mine. And we plan to do that by end of 2024 with the aspiration to produce 20,000 tonnes of nickel per annum for a long life. So we think we have the resource to do it. We think it's positioned in a very good location, and we've got the right team. So for those who are not familiar with the Carajás mineral province, it's basically like combining the Pilbara and the Gawler ICG craton in one. It has the world's second biggest ICG mine in Salobo and the biggest iron ore mine in S11D. And Valley have been here since the 70s, and they've invested very heavily in infrastructure, power, road and rail. We're located only 15 kilometres from the Valley Onça Puma ferronickel plant that was built in 2012, and they spent $3 billion there. So the towns of Tucumán and Orlanja do Norte, they're servicing that mine, and they have a population of over 70,000 people. That's 40 kilometres from our site. So getting skilled labour should be relatively easy. Tucumán hosts a substation, a 138 kV substation, which is about 40 kilometres from the site, so we should have good access to low-cost power. So the resource currently stands at 58 million tonnes at 0.95% nickel, and as I said, the focus of our drilling to date has been to bring the indicated up so that we can deliver a scoping study. All our deposits remain open, and 80% of that resource is within 200 metres of surface. So that means that this is going to be a large open pit mine. The resource was based on 70,000 metres of drilling, and within that resource there is a high-grade component, and that just shows that if required, there is optionality to increase the grade through the plant. So behind me, these are the Jaguar deposits. The strike length there is about 3 kilometres, and these are the Onça Rosa and Onsopretta deposits in the background. Now, the yellow shows you the indicated material, and you'll see that at Jaguar Central, Jaguar South, Jaguar North, and Onsopretta is where we've been focusing the drilling. And those deposits hold 67% of the mineral inventory, and they're the deposits that are going to underpin the scoping study. At Jaguar Central, we've got 10 million tonnes at 1% nickel, and 80% of that is in indicated. At Jaguar South, we have 18 million tonnes at 1% nickel, and more than 50% is in indicated. And I would suggest if any of this was in Kambalda, these would have been pits 20 years ago, and there'd be underground operations working under them as we speak. So with that resource base, we are now, we have the model in the hands of Entech, who are running through the mine scheduling. And DRA Global have been responsible for doing the work on the plant capital and operating costs. We've done extensive metallurgical test work that continuously demonstrates that we can get 80% recoveries and produce a 16% concentrate with good iron MgO ratios and low arsenic, so a very saleable product. The scoping study, what we call the base case scoping study, will be a conventional flotation plant, similar to what we see at Nova and the other plants in WA. The positives for working in a region like the Carajás in Brazil is that we are in an area that is can get a 15% tax rate for the first 10 years, which is really favourable for the economics. And also, as previously said, we've got the less than 10 cents a kilowatt hour power costs. So the scoping study will be delivered in early March, and I believe that our shareholders will be very happy with the results. So in parallel to the base case study, we are evaluating the possibility of taking that concentrate and putting it through a POX and producing nickel metal and MSP products of copper, cobalt and zinc. POX testing is demonstrating that we get good extraction. The advantage of POX in producing the nickel metal is that you will get paid 100% LME nickel price. Now, which compared to the payabilities that you might get for a nickel concentrate, which might be 72 to 75%, that is all on the bottom line. So it's a very attractive case. In addition, you can focus on recovering your nickel and not worry so much about your nickel concentrate specs. So that allows you to increase your nickel recovery, and also any nickel metal will be sold FOB mine. So then you reduce your transporting costs. So there's many positives in taking the concentrate through to a metal, and we're investigating those. We need to do a different mine plan because obviously the revenue factors are different and the cost of factors are different. So we're aiming to deliver the scoping study for the value added case at the end of March or early April. Now, we think that a POX case can work in Brazil for some major different reasons to other places in the world, and that the main one being the low cost clean energy, low cost skilled labour, plenty of neutralising product like lime and laterites in the area, and abundant fresh water. So that scoping study will be delivered, as I said, in end of March, April, and again, I think shareholders will be very happy to see the results. So we're working very hard to drive the licensing forward, and we've done this before. We licensed the Jambero Iron Ore project in 3 years, and that was driven by Bruno Scarpelli, who is on site. And Bruno's also had experience in licensing large projects in Pará. He helped Valley license the Salobo copper gold mine. So we've now collected all the study data for the IRIMA. We're waiting for some technical data that will come with the completion of the scoping study, and we'll be able to deliver that at the start of Q2. Most of the area where our mine is situated will be on already cleared farmland, so we see very little impediment to getting the licensing. We have a strong relationship with the community, and we've got agreements with municipalities for upgrades and maintenance of the roads. Okay, so we have a very aggressive timeline. In the next 12 months, we're going to deliver 2 scoping studies and then a PFS, and we're going to lodge our environmental licence. So there's plenty of work for 2021. Beyond that and completion of PFS, we are aiming for a formal decision to mine at the end of 2023 that will give us the time to complete construction and have the mine operating by the end of 2024. It's an aggressive timeline, but we think it's achievable. So we have already have an outstanding resource base. We are working through our scoping studies that will deliver economic results in the next few months so people can see the value in this project. And now we want to see, we've spent the last 12 months on resource development drilling, and now we want to see how big this thing can grow. As I said, all the deposits are open at depth, so we've got plenty of drilling set out ahead of us. We've got 40,000 metres of planned step out, extensional and greenfields exploration drilling for 2021. So there's three ways that we think we can add to this project. The first, in the recent infill drilling, our improved understanding of the structure and the geological models have identified a model that we are able to get the control of the high-grade shoots. The drill hole you see in front of you is hole 104 that was drilled at the end of the last year when the geologist got onto the Jaguar Central high-grade shoot. That returned 30 metres at 3.3% nickel. Including 12.1 metres at 5.4% nickel. So a really good high-grade intersection. Now, we've had a structural specialist on site, and he has identified these Z-shaped structures within Jaguar South and Jaguar Central that looks like where the fold axes run down the folds, the high-grade mineralisation is being concentrated, and they can be moderately to steeply plunging. So within the historic drilling, which is 100 metres apart, it would be very simple for these high-grade shoots to be in between the old drill holes. So we have a model to follow, and that drilling has already started. So we look forward to results from that in the coming weeks and months. And then drilling down dip. Our average drill depth is only 190 metres, and our deepest drill hole is 390 metres. So this thing has got very deep plumbing. In the Carajás, mines like Salobo and Sossego Valley are drilling over 1 kilometre deep and still intersecting semi-massive and massive sulphides. You'll see EM plates, these EM plates from downhole surveys, they indicate the presence of highly conductive semi-massive and massive sulphides and help our geologists to hit the next target down dip. So we have plenty of down dip drilling to try and increase the resources down dip and for the potential for underground mining beyond the open pit. And then good old fashioned greenfields drilling. So in the Carajás, it's all about the structure. And these structures here, these mineralising structures are some of the major structures in the regions that mineralise the other IOC mines. So they, where you see them in coincident with magnetic responses, because magnetite is associated with the mineralisation, and soil anomalies, we have multiple targets. We've been completing a lot of fixed loop EM surveys over the last 6 months, and they've identified multiple plates that we start to drill with a new RC contractor that comes on site in the next 2 weeks. So look forward to giving you results especially from Leon, Tigre, Filhote, and Fliperama, hopefully in the next month or so. So in summarising, we have one of the biggest resources on the ASX. We're located in a infrastructure strong region of Brazil. We're going to deliver 2 scoping studies that will show the economics of this project, and we have 4 drill rigs on site with more diamond rigs to come and an RC rig to arrive in the next few weeks. So we have plenty of news flow from the drill bit, plenty of news flow from scoping studies, and we're well funded to complete this work over the next 12 months. Thank you very much.
Thank you, Roger. And just checking in to make sure that our listeners online are still with us. You're still there? This is good. Rob Waugh has been Managing Director of Musgrave Minerals since IPO in 2011. He began his career as a gold mine geologist with WMC in the WA goldfields and quickly moved to exploration, where he's focused ever since. He's worked across a range of commodities and been involved in multiple discoveries, including gold at Norseman, nickel copper in the West Musgrave, uranium in Queensland, and most recently, gold at Q in WA. Please welcome Rob Wall.
Thanks very much, Jerry. Thanks too to Stu and the Vertical Events team. Always a pleasure to speak at RIU. Standard disclaimer. Please read that. It's on the website. It's also announced at ASX today. Objectives for 2021. Really, we're planning to move forward systematically to test targets, grow the resource base, but we're also commencing a PFS. So that's commenced. We want to define a very clear path to development and production. We want to progress our mining proposals and approvals and really basement drill test some of the large targets we've been developing in conjunction with Evolution on the Salt Lake, Lake Austin. Just a bit of a corporate overview. You can see the location of the project as well. Our Q project is our main focus, about 7 hours north of Perth on the Great Northern Highway. Top shareholders, again, listed there. And then really the Starlight discovery was the catalyst for the lift in share price. Some of the bonanza hits we hit last year, including hits of well above 100 grams, very close to surface at that new Starlight discovery. We're in a very strong cash position, roughly about $24 million in the bank. And we also hold positions in Legend and Cyprium. Board and management, we've just welcomed Brett Lambert to the board. Brings a wealth of experience, especially in that engineering and development sphere. And the rest of us have been with the company for a significant amount of time. Lots of exploration experience, lots of corporate experience. So we're looking forward to a new phase in our development moving forward. We introduced a new break of day resource update late last year. We have a 10-gram ore body, the majority of that being close to surface and open cuttable. It'll be one of the highest margin open cut potential projects moving forward in Australia for gold. Starlight and White Light are 360 kilotons at nearly 14 grams. And what this has done, really, we're looking at structures and loads that cross-cut the main shear systems, and it's really opened up a whole opportunity for us to make new discoveries in the belt. So these next 12 months, with a lot of cash in the bank, rigs out turning since the second week in January, will be quite critical for the company. As I mentioned, this reinterpretation of the geology, we think will lead to new discoveries through this next 12-month period. It really has opened up that critical search space to make those new discoveries. And again, as I mentioned, one of the ongoing focuses for us will be the PFS, which we've commenced, but also those new discoveries and testing those areas with high grade close to surface. The break of day resource, critical to note, a number of lodes in the resource. 85% of the gold is in the top 200 meters, and 85% of the gold is in 5 main lodes. As we move forward, have a better look at the district. The break of day resource there in orange, and just to the west of that, you can see the Lena resource. So Lena is over 1 kilometre in strike, close to surface, and modest grade. Critically for a break of day, in the top 175 metres, we're averaging over 1,100 ounces per vertical metre. We expect modest strip and very little pre-strip. The gold is about 3 metres below surface at very high grade at that new discovery at break of day. As I mentioned, what this has done is opened up the opportunity for us to make new discoveries in the belt. In particular, you can see the Starlight lode is the lode on the right-hand side of that cross-section. We've got a repeat in the White Light lode, and then we've got further potential for repeats as we head to the south. Some of those fantastic intercepts we hit late last year, 14 metres at 190 grams. But again, that critical point, only 4 metres from surface. What this has done is has made us reinterpret the geology of the belt and our understanding of the lode systems. Glenn Martin, our chief geologist, has been critical in understanding this and working this forward. We've got a number of shear zones running parallel, roughly in that north-south direction. With key components within that, we're looking at cross-cutting structures. So we've developed about 20 to 25 targets. We've tested these. The majority of those have had cold on them. 6 of them had high-grade intercepts in their first pass drilling. We're back out drilling those at the moment with follow-up work. We're excited to get results through. So that rig's been turning since second week in January, and we're looking forward to some more assay results over the next few months. We've also got a very large air core program commencing soon that will again follow up and test additional targets, including some of the ones we've already identified. Just touching on one of these, white heat. So again, we're looking at a structure that is cross-cutting or at high angle to the main shear system. We've hit numerous intervals there, 4 metres at 43, 6 at 15, 9 at 7, just to name a few. We've got a strike of about 100 metres. We're only 400 metres to the south of the Starlight discovery, one of the first targets we tested as we moved south after the new discovery at Starlight. And you can see there in that cross section, again, you've got a bifurcating lode or potentially 2 subvertical lodes. We're still drilling here. We've got the rig out turning at the moment. Again, that white heat discovery only has 2 to 3 metres of hard pan over the top of it. So it's a consolidated transported clay, but it is really hard to see through with surface geochemistry. So you need to really drill some shallow holes to see through that. And that is masking what these deposits are holding. Other regional targets, quite a complex image you can see there, but really the key features, this is the leaner break of day system running up through here, but you can see there are potential for some parallel systems in areas that are covered by about 10 to 30 metres of transported cover and no previous drill testing. So those targets 14 and 15 are potentially large shear zones, and then we'd be looking for the deposits within those. So there's kilometres of strike there for us to make these new discoveries. Some areas to the south that are exciting as well are targets 20 and targets 5. You can see some of the hits there we have on the left-hand side. We've got 6 metres at 10 at target 5, only 30 metres below surface, and 6 metres at 5 as well. At this stage, we've only done 2 drill traverses across most of these targets, and we're looking forward to being able to drill some more. The rig's there as well at the moment drilling. Those results should be coming through over the next 4 weeks or so. The metallurgy results we've been receiving have been extremely positive. You can see a fantastic gold tail in the pan, huge tail through here, nice coarse nuggets as well, up to a couple of millimetres in size from one of our samples. And again, you're getting this 96 to 99% CIL total recoveries, of which we're getting a high-grade gravity component. Again, very, very important and very critical in that you're getting this high component of gravity gold recovered, which means that we should be seeing low reagent use for our processing. There are no known deleterious elements in our ore at this stage. We're continuing with our met work, but it's exciting. It's early stage, but it looks very positive. Another key component is the infrastructure in the belt. We're only, break of day and leaner, only 3 kilometres off the highway. Infrastructure is good. You can see the Great Northern Highway leading up there from Perth, through Mount Magnet, all the way up through to Meekatharra. We're about 30 kilometres to the south of the township of Hugh. So infrastructure is good. We know that companies can truck dirt, especially high-grade gold, a long way on the yield gun. Ramelius has been a case in point. They're moving the Vivian dirt from near Leinster 300 kilometres to put in the Mount Magnet mill, making a lot of money out of it. Musgrave is striving to be a standalone operation, but there are multiple processing facilities existing in our district. We have a strong joint venture with Evolution. I'll take you through some of those results. We still have a strong gold price in Aussie dollar terms. It has come back slightly, but people forget that it's still at a very good price. The Evolution joint venture is a key component of what we're doing going forward. The green areas are 100% Musgrave. They're the areas with the existing resource base and the new discoveries we've talked about and the new hits in the exploration. On the Evolution ground in yellow and orange, dominated by the area on Lake Austin there in the centre of the project area, we've got an 18 million joint venture over 5 years. Evolution can spend to earn 75%. We're into the second year of that joint venture. We're still in the minimum commitment period. Some of the results that Musgrave have hit under the lake have been very positive. We've got some very large air core anomalies developed. For instance, this purple one here is over 5 kilometres long. This one at West Island is about 3 kilometres long. So these are real regional scale targets. Lots of gold in the regolith. We've got a diamond rig out here at the moment. We're testing the basement, looking for the primary source to this gold. Moving forward, we've got a very active year. We've got RC drilling happening at the moment on our priority regional targets, including White Heat, Target 5, Target 20. We'll have a large air core program starting in the next month as well. We'll be drilling through Q1, Q2 and Q3. We're looking at resource growth through the year as we continue to define and drill out these prospects. We will also have some resource definition and conversion drilling happening in the next few months, starting in the next few months. That's convert as much inferred resource to indicated as we can from the existing deposit base. The Evolution JV, as I mentioned, is a critical and key component of what we're doing as well with the ground on the Salt Lake. We're diamond drilling there at the moment, looking for the basement source to those targets. And we've started the pre-feasibility study, which will include Break of Day, Starlight, White Light, and Lena. And that'll be running throughout the year. One of the key components of that too will be the resource growth that we're hoping to achieve this year and input that into the feasibility study. So really for us, resources grade, good recoveries, infrastructure in our region is excellent, and a lot of exploration upside. As I mentioned, the new discoveries at Starlight and Break of Day have really opened up the search space for us, new geological ideas. The next 12 months will be really important. We've got a lot of exploration work ahead of us, a lot of work with the PFS. We think they've got a lot of opportunity there, make new discoveries and grow that resource base. We have an exploration joint venture with Evolution. So we've got a lot of news flow and activity, drilling happening at the moment on a number of regional targets, awaiting for assay results to come through. Resource infill drilling also starting around that March, April time period for the Lena Break of Day system. We're well funded, we have a strong gold price environment, and we've got a very good team led by Glenn Martin and Kelvin Blundell. And again, thanks very much. We'll be at the booth for the next few days. Please come and see us. Any questions, feel free to ask.
Thanks, Rob. One final presentation before morning tea. Julian Tapp is an economist, an approval specialist, a nuclear energy advocate, and VIMI's chief nuclear officer. He's been in mining for 17 years and with VIMI since 2013, performing several roles, including obtaining approvals, securing investment, and navigating the peculiarities of uranium markets. Please welcome Julian Tapp.
Thank you. And can I just start by saying, unfortunately, Mike Young, who was due to give this presentation, isn't able to be here today for personal reasons. So he asked me to send his apologies, and I hope you'll all be able to catch up with him soon. Right, firstly, the disclaimer. It basically says, don't invest in Vimy on the basis of what I'm going to tell you today. Do your own research and then go and invest in Vimy. Okay, so it's a bit cliche to say that we live in interesting times, but we do for uranium. The really weird thing that's happened in the last 3 months or so has been the price of uranium equities has surged, and everybody's looked across at the price of uranium and said, well, that's strange. The price of uranium hasn't really gone anywhere for the last few months, and yet equities have gone up. In some cases, they've more than doubled. And the question is, you know, what's going on here? And I think the answer is just a genuine change in sentiment towards uranium as a result of things that other people have been talking here today about, the green revolution, the emphasis on net zero emissions. All of these things, what people often don't understand is that uranium is at the forefront of low emission technology. When you buy your electricity from the grid, if it comes from uranium, it is the lowest carbon source of electricity, bar none. And look, if anybody wants to discuss that, I'll be hanging around at the booth. I'll explain to you exactly why that's the case. And so what's happened is that in the US, there was a general feeling that the Democrats were potentially anti-nuclear power. Biden's come to power. Trump didn't do a lot for nuclear power. Biden's come to power and straight up said, look, we understand nuclear has to be part of the mix if we're going to meet net zero by 2050 in the USA. And that was a surprise to lots of people. And so the sentiment has shifted very positively towards uranium equities because there's a recognition that there's going to be a lot more demand for uranium over the next 20 years if the US is serious about net zero. And look, I will talk about the US a lot in my kind of view of the world. The reason why I talk about the US a lot is the US reactors are still a third of the world's nuclear reactors, but they're more than 2/3 of the accessible market for a company like Vimy that's looking to sell not to the Chinese, not to the Russians, but to the Europeans and the Americans. So they're a very important market for us. And look, I think the other thing is, you know, and I'll come on to it, there's kind of, and look, COVID's contributed to this, there's a sudden realization that the supply perhaps isn't going to be there to meet all of this. I'm not saying there isn't the uranium in the ground, it's just that people have worked out that a lot of the uranium that's in the ground is not going to be developed and not get to market in time to meet the increase in demand that comes from the sort of, I'm not going to use the word renaissance of nuclear because it's been used before and found wanting, but there's just a general acceptance. And look, and again, to give you some background, I work with the World Nuclear Association. Their last forecast of demand for uranium, their low case scenario showed growth. And I think people miss the fact that the uranium industry is actually in good health. So we've had a mini boom over the last 3 months, but we think there's another one coming. And look, I don't want to sound like a broken record. Lots of people have been up on these sort of podiums in previous years saying, gosh, there's a uranium shortage coming. And I understand that out there it can sound like the cry of wolf, right? But just hear me out for a minute, because nuclear power is in good health, it's growing, and you know, there's a lot of talk in the media about it being a dying industry. Not many people know that the nuclear industry is bigger now than it was pre-Fukushima, and it's projected to grow. Not spectacularly, but it's going to continue to grow. And so that leads me to potential shortages. And I'm talking about shortages as early as 2023. And the reason for that is, again, it's partly just that places like China are continuing to build and put into production nuclear power plants that have to be supplied by fuel. And look, you have to understand, in the nuclear industry, you never run out of fuel, right? It's a multi-billion-dollar plant. that produces, the average nuclear plant produces about 8 billion kilowatt hours of electricity a year, and you don't let this thing run out of fuel. So utilities, as a precaution, tend to buy their fuel. They actually lock in the contracts 2 or 3 years before they need it. So right now, the nuclear utilities are looking out to 23 and 24 and are trying to lock in contracts. And they can see, and look, I go to the meetings with them, we all look at the supply-demand situation. The utilities can all see that there's not going to be enough supply in coming years. And they're trying to buy in those coming years now. So I want you to look at if you could look at I think I'll get this pointer up. If you can look at this area here, you look at and this is the World Nuclear Association figures, so I'm not spruiking these or making them up. They are the most conservative bunch of people you'd ever have to deal with. And yet they say, look, we recognize that from about 2023, 2024 onwards, and remember they're buying in that period now, there's starting to be a shortage developing. And as I explained to you earlier on, the US utilities, for a company like Vimy trying to write contracts with utilities that will buy our product under long-term contracts, the US is the most important market. And the US utilities have noticed, for example, that when COVID-19 struck, the one area of the world where mining didn't cease to produce, didn't call force majeure on their contracts for regular supply. And remember, these utilities, security of supply is paramount. They've noticed that Australia performed incredibly well in that relation. And again, I want to give you some perspective of what the US utilities are dealing with. They're dealing with potential Russian suspension so that they can't buy the uranium they want from Russia because for political reasons. They're looking at Iranian sanctions. Quite a lot of people supply the Iranians with technology and fuel. If there were sanctions, they could find they can't sell their product to the US. And then they've looked at places like Canada and Kazakhstan, who've essentially have to shut down certain of their activities to deal with COVID-19. So Australia is looking like an incredibly reliable first world jurisdiction from which they can secure reliable supplies. And remember, Australia is part of the Five Eyes Agreement. And so there are no security risks around having Australia as your supplier. So the US utilities, you look at this, you can see they haven't bought the uranium they need in future. They're looking to do it now. They're worried about all these political factors. They're talking to Vimy. We're pretty much top of the list of the non-first tier suppliers. There's 5 first tier suppliers, and we're top of the rank for the next tier. Now I want to move on to just to let you look at this market and understand how volatile it is. This ramp up that we saw in 2007 was on a belief of a coming shortage. There was never actually a shortage. There was a belief that there might be a shortage, and that's what happened to the market. And round here, the utilities, so the thick line is the spot price, and the thinner line is the long-term contract market. And around that period when the price got to $95 in the long-term contract market, a lot of the utilities wrote contracts with suppliers, long-term contracts, some cases that were as long as 20 years. And so one of the reasons why a lot of mines have managed to survive through what are since then poor, very poor prices has been because actually they wrote contracts back here and they've been getting that price all this time. But those contracts are falling off now. So is there a consensus about the price? No, there isn't. There's a huge difference of opinion about where the price is going to. The one thing I'd point out to you is everybody thinks it's going up. It's a question of how much. The median of the consensus views is that the spot price is going over 50. And if the spot price goes over 50, that we would expect the long-term contract price to go over 60. Now I want to turn to the company itself. We have two deposits. We have a fully developed project, which is Mulga Rock, effectively shovel ready. We just need the price. We just need a price where the utilities will write contracts with us to get this project going. And then we have another project in the Northern Territory, which is, has huge upside potential. And again, I don't want to mislead anybody. We seek investment. The utilities will not invest in mines. They've invested in mines before and they've been burnt. We talk to them all the time. They're very interested in writing long-term contracts with a company like Vimy that will secure our ability to raise the finance, to put it into production, to supply them. They're willing to do that. We're just waiting for the price to be high enough. So we've had this change in sentiment towards uranium. We've seen a mini boom in the equities. There's a certain amount of fear of missing out. And look, it wasn't necessarily rational. I say that because everybody who had uranium in their ticker name went up in value. And one of the strange things was you've seen how much ERA has gone up in value. Everybody knows it's a uranium equity, but actually they've stopped mining, they've stopped producing. It is a large ex-uranium mine with a huge amount of liabilities associated with rehabilitating it. I'll probably never make any money ever again. It's difficult to understand why a company like that went up sort of 50, 60% in value. But it was uranium. So that was the nature of that boom. But we're still expecting another one to come. This was just the beginning. Another one to come is based on a stronger shift in sentiment about uranium feeding through into pricing and the price the utilities are prepared to pay under contract to secure a reliable supply. And Vimy's well positioned to capitalize on that. So look, we're an undervalued company compared to our peers. You look at the average, you can see that we're down the bottom in terms of valuations. Whichever way you look at it, whether it's resource to enterprise value or anything else, we're an undervalued company. We have two great projects. I've already said we've got the Mulga Rock. I think anybody who's been to these conferences will have seen presentations where we've gone through what this project is. It's now ready to go. It is a good project. And then we've got the area in the Alligator River region. We have a small but potentially tier one asset. What do I mean by tier one asset? It can be mined and get into production for profitably, even in a downturn. It's that good a deposit. So look, I'm going to skip through quickly because I'm getting to the end of my time. The geology, we understand the mine completely. We've actually mined 2 pits at Mulga Rock, so we're very, very confident about the mining costs. And also we've built a pilot-sized process plant. We're very confident about the processing costs. And everything works. I mean, this is completely de-risked. The only risk now is about the price of uranium, and we're confident it's going to be high enough to justify it. We did a DFS. We did a refresh of our DFS. So we're very confident around the numbers. It's what I call it's almost like we've got Goldilocks numbers. We're not too big, we're not too small, we're not too expensive, we're not too cheap. We're just perfect for fitting into the market when the boom comes. We're not so big that we can't get enough contracts from US utilities to underpin our contracts, our getting into production. And this is us against our peers. So we have a more modern DFS than anybody else. And as I've said, the numbers are exceedingly good, just what we need to get into the market. This is the Mulga Rock project against the cost of existing producers. And you can see we're not bottom of the curve, but look at the shortage that there is. So you've got this is the current level of production estimated for 2020. This is the reactor requirements in 2024, where they're looking to contract now. There isn't enough supply, and we're in the middle of that cost curve. So have to mention base metals. Everybody's been talking about battery minerals. We've got lots in this deposit. If we're able to extract them, it will reduce our mining costs by the equivalent of about $4.50 per pound of uranium mined. I'm not going to talk about the Alligator River uranium project. All I can tell you is we've heard people talk about fire and smoke. Let me tell you, the smoke around uranium up there is absolutely choking. Everywhere you look, the problem is sometimes it's at depth, sometimes it's difficult to detect where it actually is. But this area where we are, and by the way, that's showing the scale compared to the Athabasca Basin, the cover gets thicker and thicker as you move this way. So we're right in the sweet spot where the cover is the lowest. We already have a scoping study on one project. We're still looking for more. We're doing limited work out there at the moment. We intend to get back on it when conditions improve more. And I'll finish with a snapshot of the company. So you can see, we talked about the share price going up. That was the uranium price. That was the share price. So we have good liquidity. We have a good mix of shareholders. We're well positioned for whatever comes next, which hopefully is the investment in actually bringing this project into production. We're doing our best to manage costs at the moment. Some of us are taking shares in lieu of salary. Some of us, like me, I work 2 days a week to try and keep the costs down, so I only charge for 2 days. We're continuing to do work on Mulga Rock. We're looking at ways to reduce the costs. We've looked at getting base metals out. We've done some work on resins. So we're happy that we're getting the cost down as low as we can. And Alligator River, we're looking to partner on Mulga Rock or Alligator River to try and accelerate bringing these into production. So thank you very much.
Julian Tapp with the story of Goldilocks and the 2 uranium mines. Morning tea is next, and we are back at 11:15.
So obviously the importance of hydration and nutrition on site are massive. When it comes to being up on site, we are in something like 40 to 50 degree heat. The guys are sweating profusely for up to 12 hours a day. They're wearing heavy clothing throughout the day. So hydration is absolutely crucial.
NIQ is a smarter source of hydration and nutrition for active and hardworking people. We're an Australian company. Our products are made in a TGA licensed facility right here in Perth. NIQ products are smarter because they provide clear performance benefits using only healthy and natural ingredients. Our products were developed by an Olympian and a biochemist. Our brand has a sporting heritage, but has been blended with health and science.
Remote workers are often doing extremely physically stressful work in hot conditions. Prevention and early detection are the 2 easiest ways of ensuring those sustained, required long periods of concentration, energy levels, and decision-making during those long shifts.
In terms of our ingredients, we do not use simple sugars. We only use complex carbohydrates to power our products. All of our flavours are derived from natural fruit, sourced from Queensland. And our protein is sourced from Fonterra in New Zealand, well renowned as one of the cleanest, purest dairy suppliers in the world.
Simple sugars create spikes in the blood sugar levels that then can create poor insulin regulation. Sugars such as disaccharides and polysaccharides are a far better option because they offer slow release energy. That's ideal for workers on long shifts. The NIQ protein and electrolyte mix is the perfect grab and go hydration solution.
The NIQ electrolyte whey protein isolate is designed for rehydration and muscle recovery. This product is suitable for workers who are doing more than just sweating. They are exhausted at the end of each day. The NIQ electrolyte whey protein isolate provides the benefits of sustained energy, rehydration, and muscle repair in the one drink.